Wow, I am a total dummy. Can you guys hear me now? It should be fine now. Yikes. I forgot I had to like add myself to the stage. Um, you guys should be able to hear me now. Anybody? Yes, no. Hello, hello, hello. Oh my goodness gracious, this is quite annoying. Let me just see this. Let's see. Uh, Anybody? Yes, no. Hello, hello, hello. I can hear myself now. Good. All right. Good. Let's get it started. So sorry about that. I have to using StreamYard, I have to enter into the room and then I have to add myself to the speaker stage. So that's why uh off the jump there was no audio. So I was talking to myself for about a minute there. But anyways, welcome everybody. We'll get into some live charting here. As always, let me put this out there first. Any charts that you guys would like to see, feel free to comment under this the tweet of the live charting and stuff. Just comment the ticker you want to look at, and I'm going to get to those quicker as long as there are some. And we'll get to those first, and then that way, I'll still do the names that I do typically, but this is really just a not now. Are you kidding me? What is going on with this shit, man? I think it should be fine. I'm gonna get to those quicker. I can still hear it as long as there are some. Yeah, all right. You know what? We're gonna run with it, and hopefully you guys can hear me. If I get overwhelming messages that you guys cannot, then I'll, I'll try and fix it. But I think we're okay. But anyways, this is just nightly what I do to prepare myself for the next day, or if I do this on the weekend, it's just how I'm preparing for the next week. So I have a set list of names that I typically go through and try and formulate some sort of bias going into the next day. Now, a lot of people might say having a bias is not such a good thing. I would disagree. I think when you start to see that you're actually getting pretty good at determining where price is going, it makes your trading much easier in terms of feeling as if you have a good idea as to where price may be looking. So rather than looking for maybe a short setup that might be short lived, we might hold off on that one and look for the next long setup that turns out to be the big move. So with that being said, let's take a look first. And again, if you guys have any, input, comments, any tickers, I see Rivian right off the bat. We'll do Rivian right after this one, Green Tony. But first and foremost, one that I look at quite often and something that I think is completely underrated, and I don't think many people look at, and I would argue that they should. I think the dollar index is a great tool to use in confluence with your trading. And you might say, oh, well, I heard about the dollar, and everything that I was told about the dollar was that it was simply the inverse of what the S&P or NASDAQ would be. So if dollar's going down, then I would expect NQ to go up, right? No, no, duh. So how is that useful? Well, I would tell you that I believe that it's useful because not in a perfect world, they are moving inverse to one another. But the difference here is the dollar is also creating some specific levels that we can use and then pair them with, maybe whatever the setup is on NASDAQ. Maybe we're approaching a pretty large imbalance, a bullish imbalance on the dollar, right? And on NQ, all you're seeing is maybe a little one, and you're holding long and you're expecting price to continue higher. But then you take a look at the dollar and you see that we're approaching a pretty big bounce area. You might say to yourself, okay, look, I need to be a little more cautious here. I'm going to slide my stops and profit up, and that might prevent you from catching a knife. So little things like that. And that's why I think it is really important that the dollar is something that is incorporated into a lot of people's trading strategies. I know a lot of people use the VIX. To me, I think the VIX is broken, and I think it's been broken for about a year. And the reason why I say that I think it's broken is because maybe it has something to do with the what's the right word? The uncertainty. Everybody would automatically equate the VIX to being the fear index, and while I don't disagree with that, I would just say that I think with the level of uncertainty that we have right now, whether it's economically, with the two conflicts that are going on the other side of the world, whether it's I don't know, we have a presidential election coming up next year, right? So there really are a lot of variables that are really working themselves out as we speak. Um, and with that being said, I don't think people feel comfortable going far out with calls or put, right? Me personally, I don't like to swing trade anything because to me, bringing something over a weekend where I have zero control over those contracts, that's pretty frightening to me, right? All it takes is one bad person in one bad part of the world to do something silly and we're in some trouble, right? And I would personally try to avoid that at all costs. And I avoid that at all costs, not really swinging contracts. I do have one position right now that I am swinging in. It's not a substantial amount of money where if something crazy were to happen and I would, get hurt, I wouldn't really get hurt too bad. So that's the way I'm looking at it. It's strictly a technical play, not an end of the world play or a stock market crash type play. I'm in it because I like what I see on the chart, and everything else is well defined. Look, if we were to gap down overnight and take out the level that I had as my stop loss, I have a little wiggle room in there where if I take the loss, I take the loss. But other than that, I'm pretty straight up. I'm really just looking at intraday price action, trading that, and kind of forgetting about everything else. So, um, but with that being said, to the dollar. Now, I'm looking at the dollar right now from the weekly time frame, and you will notice that in this most recent uh, price run, from this low that we made back in July up to the recent high that we made in early October, uh, you'll notice that we are currently retracing back down into discount of that range, right? Which is fair. But if we're to stretch that out and look at a little bit larger of a range to try and get a better overall picture of where things are going, I look at it from this perspective. We made high dating back to September of 2022. So down to that low that we made in July of this year, I have my range set from high to low. Why would you use that range, Mando? Why does that make sense? Well, I take a look left and I see that we've taken out a swing low in the process. So by taking out this swing low, to me, market structure is bearish here. Again, we're looking at a much larger picture. This is over, multiple years at this point. But I want a good feeling of where I think price is going to go from this point, right? So the fact that we took out that swing low, to me, this market structure or trend is bearish. Okay. So now, as you can see, yeah, we do bounce a little bit, right? But if we were to bring our fib back up to here, and this is what it looked like in the moment, right? You'll notice we don't get back up to 50%. And the fact that we don't get back up to 50%, all that's telling me is that this range is not set. Okay. So following, we get a little bit of a bounce and we start to retrace lower yet again. Now, when we retrace lower, we set up something called relative equal lows, not a double bottom, right? People who see this and they say, "Oh, that's a double bottom. We're gonna bounce and reverse from this point." There's a crucial key piece of information that's missing from this chart right now, and it's specifically on this candle. Okay, the fact that we made this low here, but we did not sweep this low here, we're not taking liquidity. All this is telling me is that whoever went long here, because somebody had to go long here, right? If price stops dead in its tracks right here and starts to move higher, using logic, that would make sense, right? Somebody went long at that point, right? So now on the flip side of that, when price retraces back down lower, you'll notice we do not sweep this low. So all that's telling me is, and whether it's the same people, a different group of people, hedge fund institution, you name it, had to come in here and prop price up so that it didn't take out that low. Because if it were to take out that low, likely stop losses would have been hunted and they would have swept them out of their order just for the market to reverse and go higher, right? So while we do get another little bounce here, very, very small, you'll notice that we have double the pool of liquidity, right? Longs from this point here and longs from this point here. Liquidity wasn't swept at that precise point back there in April of 2023. We didn't sweep that low. And because of that, we have to think, what is the goal of the market? The market's goal is to be on an eternal search for liquidity. That's all it's looking for. Because if the market can find liquidity, that's what's going to generate the gasoline to drive this car and make it move, right? So without that, we're not going anywhere. Okay. So the fact that we have double the pool of liquidity here, that's almost a giveaway, or the market tipping itself to me and telling me that we are going to go lower and swipe those relative equal lows, take out double the liquidity. And from that point, that would be an area where I would consider some sort of bounce, right? Now we're talking about a triple bottom. People just throw things all over the place and hope they stick. But to me, just using logic, I think, can be a very useful tool in this specific situation. Now, we sweep the low, right? We never got back to 50%, so our range wasn't set, right? So I would have my low set here, and just, again, we'll see. Will we get back up into 50% of this range, set the range, and will we specifically get into a bearish imbalance in discount? So in a bearish price range, like we have right here on dollar, right? High to low, we swept this low. We're in a bearish trend, or have a bearish market structure. So us retracing back up into discount, which is over 50%. Think about it. If you're going to buy a short here and you have a pretty good feeling that it's going to go down, right? Where would you want to buy it? I want to buy it as close to the top as possible, because then my risk is here and my reward is all the way down here. So I have a limited risk on that with a much larger potential reward. So anything over 50%, you're getting this at a discount, right? Because if 50% of the range that we have mapped here is fair price or equilibrium, we would expect that once price gets over 50%, it's in balance in one direction. One side of this trade is going to get more than 50%, right? And in this case, it would be bearish. And the fact that look how measly we just wick right up into 50% right here. Boom. 50% bearish imbalance to play with it, right? And here is your downside move. Now, for my model to complete in this particular situation, we would have to sweep that 99.57. If that happens, to me, that's all-time highs. I'm not so sold on that, and here's why, and here's how this plays into tomorrow for me. I want to see how the dollar closes this week. If the dollar closes this week inside this bullish breaker, and bullish breaker is a setup that we use, and it's one of those things where once you see it, it's going to be difficult for you to unsee it. But it is a low, a high, a lower low, and when you break above that high of that little setup right there, all we're looking for is some sort of retracement back down into that level, and that should act as somewhat of a support. Now, here's the thing. We do have a bearish price range, and we also created a bearish imbalance 2 weeks ago on the downside. Ready? And it'll look something like this. I'm going to throw on my little rectangle right here. So there's your bearish imbalance. If you notice, on either side of that down close candle, there's no wick where I'd have my rectangle. So the fact that that's left open is telling me that's a bearish level. And we're holding on to our bullish breaker. So if we are to hold this bullish breaker tomorrow, my expectation is we get a little bit lower on NASDAQ, and I'll show you that in just a second. But I need to see how this is going to close. Are we going to close below it? If we're to close below it, then I think we will get that bounce on NASDAQ. And I'll explain why I'm a little conflicted on that in general in just a second here. But if gun to my head, I have to guess prior to actually letting price show me what it's going to do, I would expect that this week we hold on to this, then maybe get us a little bit of a bounce into this bearish imbalance right here. And from that point, I believe that we would reject and head lower. Now, just one quick thing on NASDAQ here really quickly. And again, I think this could be helpful for anybody, whether you trade QQQ, NASDAQ, any tech name, Apple, Tesla, you name it. How do I think this can be useful to you? Well, let's take a look. We have a bullish price range on NASDAQ, right? We retrace back down to 50%. Look how beautiful that is. Just got into discount and we take off, right? Creating a bullish imbalance here on the weekly. We also created a bullish imbalance here on the weekly. Whoops, right here. Let me change this color over here to green. Boom. And we made one more. So this purple box right here is a bearish order block. That's why I have it on my chart. And you can see price is stalling out, right? We're filling quite a few orders uh, and price is taking a while to get through. But here's something that we need to take a look at right here. This is where I'm a little crossed, I got to be honest. Ready? So do you see where we've held so far on this weekly candle? Absolutely perfectly on previous buy side liquidity right here. Check that. That's August 28th high. We broke above it 2 weeks ago, came back down, retested it. We held on to it. But this week, look how perfect that is. Right off the high of that level, right? So again, anytime somebody says that price action's random, I chuckle to myself a little bit because that's just a little too perfect for this to be random. I'm sorry. But with that being said, we perfectly bounce off of this level on the weekly, right? Could we retrace lower? Not quite getting into it all the way down. Sure. Yeah, we did make a really big bounce at the end of the day, and it's actually something that I traded. Uh, the photo is on my Twitter, but the video I have to still edit. I didn't edit it yet, so it's about 7 minutes long. I like to keep them under a minute, so it's pretty quick. But my question now from this point is, do we finish the week on an up close? And all that would take would be a move above 16,007, which is not all that far away, about 45 points away. Or on the flip side of that, do we need to come back down and test this weekly bullish fair value gap? That's something I'm considering. And here's where I'm getting crossed up. So this is NASDAQ, which is the price movement is going to be very, very similar, almost precisely the same as what QQ would be. But here's the difference. Let's look at QQQ. And I'm glad Ryan, who is a very, very good trader, his at is retrades. He brought this up, and I'm glad he did because, well, and maybe I'm not glad he did because it just kind of crosses things up for me just a little bit. But if we take a look at NASDAQ, like, look, this chart is almost perfectly identical to what we saw. Whoops, hold on. Almost perfectly identical to what we saw on NASDAQ, right? Same type of move down into 50%, bullish imbalance and discount takes off. We also create these right here. We create these bullish imbalances on the weekly. Now, here's the one difference, and this is where I'm like, does NQ really have to get into that weekly fair value gap, or was what QQQ painted enough for us? Now check that. Look at that. Look where we bounced today. Right off the high of that weekly bullish fair value gap. So while that's really informative and that helped me take that trade towards the end of the day, I used that. I used a inverse bullish fair value gap, and I'll show you where in a second. But that, in conjunction with what Ryan had said, which is this, the inverse fair value gap that I also looked at, and I'll show you that in a second. And also, I got an alert. I have my cheddar flow alerts on, and I got a cheddar flow alert that there was a dark pool print on the Qs right at the level that we took off on. So all three of those things in confluence, that led me to feel pretty good about taking that long trade, getting us back into discount of what would be a short-term bearish range. Now let's take a look over here, and I'll show you exactly where it was. So check this. Ready? That box isn't going to make sense right now. That's a 15-minute, but ready? Zoom in. So here's our range from today, high to low, right? Today was ugly, sloppy. And again, that 15,837 is actually the level that where the weekly bullish fair value gap is that we didn't get into on NQ, but that we did get into on QQQ. So that threw me for, a little bit of a loop. I got to be honest with you there. But now, here's what gave me a little added layer of confidence here. So obviously, we're melting down. We did sweep higher time frame liquidity. I don't have that level on right now because after it was swept, I deleted it. But so here's right here. Ready? We set our range, and now let's take a look. This is all that's really important. Okay. So ready? Beautiful, gorgeous Mando model in action right here. Okay, so ready? We took out this high right here with what price run? Okay, I would argue it was this one, right? Fair enough. Okay. Now ready from low to high. That box right now, this is a 15-minute, which I was looking at, but 5 minutes still plays. Ready? So here's one. Bullish imbalance. Look on either side of that wick where I put that rectangle. You are not seeing any wick on either side. Ready? Let me zoom in a little bit more so you guys can see that. Ready? Boom. Perfect. Okay. And here's our second one. Ready? Boom. Boom. Got it. Okay. So those are two bullish imbalances in discount of a bullish price range or a bullish trend. Why is it a bullish trend? We just took out a high. Okay. So my expectation is, and my model, if you want to look it up on YouTube, you can look it up. It's all there. And that's it. That's really all I'm trading. So if we take a look, we see this price run takes out this high for us. Then price retraces lower, gets us down into where? Discount of a bullish range. Is there a bullish imbalance that we can pair with this? Mando, it's right here. Boom. Okay. Oh, well, that's an ugly low wick. Well, guess what? We have another one right here. So how can you operate using this as a method, right? Okay. Well, think about it. Does the risk reward make sense for you to, in this range that we have mapped out right here, for us to take 70% of the range while risking 30%? Does that make sense to you? It may not. Everybody's different. The range is pretty big right now, or in this particular situation on NASDAQ. So if you were to take that long entry off of here, like I did at 881, your stop loss isn't until 58. That's like, 20, 25 points. That's a lot of money potentially, right? Now, I didn't take this trade until I saw us wick back up into it and start to take off a little bit. Now, when we did show that there was willingness to go higher, my entry was here, and I already knew. Okay, my stop loss is now going to be below the low of this candle just to protect myself, just in case I was wrong and I didn't want to get smoked and lose a ton of money with really 30 minutes left in the day. But I also saw, okay, this is my model perfectly, right? I know in the larger range that we looked at just prior to this, where's 50%? Where's discount retracement? Bing, 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 bing. Now check this. There it is, right off 50%. That's where price ran to, and that's where price rejected. Now, did I get stopped out? I did. You know why I got stopped out? In profit, so I was happy. Sick trade, made over $1,000. But now check this. Ready? The reason why I stopped out on this trade was when we took this high, this candle, oh, wow, I can't believe you sold this candle. You're dumb. We swept this high and we started to chill. If you want to do market replay, you could do market replay. So we were chilling out here and we ended up getting a little bit of a low pullback down here. And with it being 350, 10 minutes left in the market, I said to myself, okay, I'm up $1,000. I'm going to be aggressive and slide my stop loss up with it. So if price ends up stopping me out, guess what? I'm still going to be happy with what I took out of that, despite missing out on quite a bit. But there's 10 minutes left. You're kind of a fire situation, so I want to be a little more careful and lock in what I had made. No need to be a hero in that situation with 10 minutes left in the day. So, but this is perfect. My model completes at this high. Did we complete the model at this high? Oh yeah, Mando model right here. That's it. Shift in market structure. Shift in market structure. Took out this high with this price run. Map your range. Now look for a discount retracement into a bullish imbalance. Discount retracement below 50% into a bullish imbalance. Bing, bing, and we go. That's it. Keep it as simple as possible. So, and with that move, there are discount bearish imbalances overhead, and we also have that weekly new week open gap, which is something that I'm curious to see. Are we going to close above on the weekly? Is this weekly going to paint a bullish candle? We also have the first day of December tomorrow, so the start of our new monthly candle is happening. So there's a lot of things going into this, and to me, I'm usually against this, and I'm going to stay true to myself here. I'm not going to go crazy on the first Friday of the month. Again, first candle and a monthly candle. My bias isn't so strong where I feel 99% confident at this point. You know, I still favor that up move into that 16,257, but I'm not gonna just continuously bang the table at it until price shows me that it actually wants to do it. And how would it show me that it actually wants to do it? Well, if we were to take out yesterday's high, then I'd feel pretty good about that. But without that, I'm still going to play it a little bit neutral, um, and kind of go from there. So, um, so yeah, that's my spiel there. So if anybody's listening right now and you want me to chart something, just shoot me or comment under this tweet here, and I can get to that. So far, we have Rivian and Nvidia. Nvidia is one that I typically look at every night, anyways, so that's good. That works for me. But before, good. Let me just answer this, and let me just look in the group and see if anybody. Let's see. I see somebody tagged me in something in here. Oh, Seeker. Gotcha. Yeah, Seeker. I'll take a look at that for sure. Okay. So let's see. Do we have any more requests? Don't jump everybody at once. All right. Let's look at NVIDIA first because I've had NVIDIA charted, and it'll be much easier. But we can do Rivian together because I think I've looked at Rivian, but I don't think I have it charted right now. Where are we? NVIDIA right here. Okay, so looking at NVIDIA. Ready? Ready? Okay, so we actually did complete my model on NVIDIA. And where was the completion of the model? Well, let's take a look. Ready? What was the high that took out this high? I know it's an ugly one and it's boring, but this is the best I can do right now because at this point, this was the all-time high. So, this is the best I can do in terms of like mapping a range and all that stuff. So, if we're to go from here to here, okay, and it's really not subjective. I mean, you can go lower and you'd still get a very um, similar result. But if we take a look, here's our Mando model completion ready from low to high. Ready? Hold on. Bullish imbalance right here in discount. Bounce, bounce, bounce. Swept the low. Turtle soup ran up for the highs and took out right here. Mando model complete. Right off the bat right here. But the fact that we swept higher time frame liquidity, and I know people in the group are going to know this, but if you haven't listed anything that I've ever done before, when we sweep higher time frame liquidity, so that means liquidity on a weekly, a daily, an hourly, we have to, and in that order, truly, we have to be aware that when we sweep higher time frame liquidity, you're going to get one of two things. You're either going to get that imbalance candle up and we get the breakout and it continues higher. But on the flip side of that, you can also get a sweep of the high and a reversal. And that tends to happen more often than not on a higher time frame sweep, like a weekly. So the fact that we swept this high on the weekly, look what happens immediately after. Come on, look at that. Just a little bit. That's it. That's all it takes. And now, to me, at this point, is the range set? I would argue that it is. We created a bearish weekly order block right here. Up close candle followed by a down close candle that overtakes the open of the previous, right? So to me, we've set this range, and at the very minimum, I believe that NVIDIA is going to come on down here to 448.89, which is a discount of a bullish price run. Why is it a bullish price run? Low to high, took out that high right there. So while the trend is still bullish, that doesn't mean that we can't retrace lower. And that's exactly what I'm thinking. And that's really the only time where I would feel confident looking long whatsoever. And it would really be in a well-defined range. And look how defined this range is. 448.89 is 50% of the range. And look how perfectly that lines up. Come on, you cannot tell me this is not, programmed, algorithmically programmed. Seeing random, look how perfect. It's literally right at 50% is bearish and bullish imbalance. It's crazy. So my expectation is price gets down into that 448.89. Again, this is a weekly time frame, so it's big time. That doesn't mean tomorrow we don't move up $5. That's not not what I'm saying whatsoever. But if we're looking at this on a higher time frame and trying to get a better idea of the general direction that we're going, I look at the weekly, and the weekly can take time. It takes 5 days to paint one of them. So one of these candles. So, but you're defined so well by using these concepts because what's your entry? Okay, you want to enter off 50% or just below it so you get into discount. Well, you have a bullish imbalance there. That's fine. 448.89. Now your risk on this trade would be below the bullish imbalance at 435.31. Can you get wicked? Yeah, you can get wicked for sure. So that again, you have to factor that in. Does it make sense? The risk reward. You could feel great about it going to the upside, but if it fills this thing, you might be a little nervous. Oh, where do I put my stop loss? For me, this would not be a trade that I would look to take because of the size of the range. That's one, and two, below this level, typically I put my stop loss below the candle that created the imbalance, and the low that created this imbalance is down here at 392. So I don't really feel like risking from 448 to 392, $90, per share on a move that could potentially only net me 50. So the risk reward there doesn't make sense to me. But from this point, I would expect us to get into here and then move higher again. So that's the video there. So Green Tony, I hope that that helped out a little bit. But we can look at Rivian now. And again, if anybody that's listening wants any requests, feel free. Throwing out there. RMD. If it's a penny stock, I'm not gonna. I can't look at it. The reason why I won't look at it is just because, these are old. I'll clear it so we can do it together. But the reason I don't look at penny stocks is because I don't want to hear any idiots on here tell me I'm pumping or something like that. So I just avoid them. I don't need to trade them. So, okay, off the bat, what do we see that's pretty eye-opening? Right off the bat, we have a bullish weekly imbalance right here from the week of June. Okay, sloppy, but still holding. Right. Also, right here, we should note that we have. I really don't want to put them all on. All right, I'm going to do it anyways. Okay, ready? I'm going to draw this purple. This is a bullish order block right here. So there's your order block. Bing, bing, bing. Okay. Now we can also look at it from this perspective. We made a low, high, lower low. If you're here at the beginning of this conversation when I showed you the setup, the bullish breaker, there it is. So breaking that candle, we would use this high right here as our breaker candle. I'm going to put this in black. Ready? Right there. Boom. I know it's going to get sloppy. I'm sorry. I just want to show you guys how precise. Oh, check that. Love to see that, baby. Holds the breaker, holds the bullish order block, and holds on for dear life onto this bullish volume imbalance from a week ago. Okay, what else do we notice about this? Well, we took a high here. We did indeed. So when we take out a high, what does that tell us? We have a bullish market structure. So what was the low that started this price run to take out this high right here? To me, it's this one. Low, the high. Ah, check that, man. Ain't that something? Hold 79, hold the discount imbalances, and we ready? All right, you tell me. I do see a couple levels above us that could be a bit of a headache. One example is right here. Well, right now, we're currently in a bearish order block. Up close candle followed by a down close candle that overtakes the open of the previous. We also have another bearish order block right here. Up close, down close, closes below the open. So this right here, it's going to get really sloppy, and I apologize for that, but I just want to show you guys. Ready? Just for now, I'm going to remove that so you guys can see this more clearly. Ready? Here. Okay. There. Now let me put it in purple so you notice. Boom. Okay. Bearish order block. Reject. Here's another bearish order block right here. Up close candle followed by a down close candle that overtakes the open of the previous right there. Boom. Boom. bearish order block. We also have a bearish imbalance right here. Remember, if you watch my video on YouTube that I put out today, you're going to see every single move that is on this chart can be justified. So here's your bearish imbalance. Look at that. And get up into the imbalance. Fill the imbalance perfectly to the exact tick. Dump. Okay, and that's about it right now on that end. Now, the completion of the model would be at 2806, and then what do we run into? We run into another order block here, here, bearish imbalance right here. See, on either side of that candle, there's no wick, right? Imbalanced. Price gets up into it, rejects. Price gets up into it, rejects. Price gets up into it, rejects. Price gets up into it one more time, and dump. Why do we reject here, Mando? Well, we have bearish volume imbalance. That's why I'm telling you these gaps, when you start looking at them from the perspective of a gap up, that gap acts as support. And when you gap down, that gap acts as resistance. That is such a game changer. I use that every single day. And just for good measure, you got one more little bullish imbalance or bearish imbalance right here from wick. See on the other side of that candle, there's no wick in that specific range. Check that. Check that. Come on. It's way too perfect. Way too perfect. Come on. That's why there's still people who say they'll be commenting, oh yeah, this is it's all random. You either get lucky or you don't get lucky. I would argue that to the end of time. Truly. I really would. But I mean, look, your risk reward on Rivian, it's solid in my book. I mean, it might be different for you, but realistically, I'd be risking $3 from 1676 to 1330. Sorry, $3.40 for an upside of 28 bucks at the very minimum. But to me, it's like, and this is why I don't do it. It's like, how long is this going to take me? What options contract do I have to get? How far out do I have to go? Because I can see an instance where this takes a while to happen, because look what we got. We got order block, bearish, bearish imbalance, we filled. I should note that. Bearish imbalance, we filled. Bearish imbalance, we filled. Like, there's stuff in the way, and that's going to take time to get through. Think about it. When there is some sort of imbalance or order block, we have to fill those orders on the way back up. So it has to be a serious amount of moves to just shred through it like nothing. But on the flip side of that, you kind of, it could take time, and then it's like, okay, it's a matter of, you could still be right, but do you have the right contract in this situation? That is the I guess the question in this specific instance. So yeah, that's that on Rivian. But yeah, not half bad. What else? Is there any others that I wanted to really take a look at? Bitcoin's weekly. I don't know if anybody trades crypto, but if you do watch Bitcoin, check this weekly candle. It's pretty interesting. I really want to see us start to get going. Where are we? It's going to load in a second. I know I have this one charted too. There it is. Check that. So if we take a look at this right off the bat, you look at the short term, and it's bullish, right? We're making the moves higher. We're making higher highs as we continue up. But we are in an overarching bearish trend, right? If we're to go back to, what is this, 2 years ago now? 21. November of 21 when we made that high. And we've had a long road down, right? So the fact that we've taken out multiple lows in the process, that leads me to believe that we are in a bearish trend, and I think that's fair to say. I know people might say, "Oh, well, we've been ripping." Yeah, on a shorter time frame, we've definitely been ripping. We've been moving higher, but in this short term, blip in time, we've been moving higher. But overall, still pretty bearish price swing. But the way that I'm looking at it now is that, look, for us to get back into discount of that bearish range, where me personally, I would be looking for downside. It's at 42,240. So the way that we churned our way through this bearish imbalance, and look, it took time, right? there is a level here, and yes, we do ultimately get above it. Why wouldn't I value this? Well, this bearish imbalance isn't in discount, so you'd essentially be overpaying for your puts or your downside trade by buying it in premium or overpaying for it, right? You discount would be where you're getting a deal or a bargain for your short. So the fact that we've gotten over it and right now we're mounting it, this weekly candle can close strong. I think 42,000 is probably our next destination there. So what else we got? Larger 50% retrace into bearish imbalance as well on Rivian. Oh, good eye there, Kyle. We'll go back to Rivian one more time, and then if nobody else has anything, I'm gonna try to. But right here, where is it? And if you want to go back and listen to the beginning of this, you can do so on here. But I'm also gonna start uploading these to YouTube as well, so that they don't get lost forever. So yeah, if we look at Rivian, oof, man, that's a tough. That's tough. Imagine going long up at 178. Ouch. Okay, so here's this. Good. There's that. Okay, and you can again, you just go to each low. Did we get a bounce of 50%? Nope, range ain't set. 50% bounce? Nope, range ain't set. 50% bounce? Nope, range ain't set. All the way down to whatever the lowest point of this was. We have quite a ways to go to get to that 50% on the overall, since inception. But you can also look at it from this perspective as well. And this is a newer name, so it might be a little bit more difficult for you to get a true read. But if we're to look at this, even this initial swing high right up here at 40.86, and until that 40.86, I don't anticipate us getting to 50% in the overall, or I guess you could say like larger time frame perspective. But if you take a look at this here, first off, ready? There's the high. What was the low or the swing that took out that low right there? High to low. Okay. Price retraces into discount, bearish imbalance, Mando model complete. Okay. So what would I do from this point? Okay. Well, I just move it to the high that rejected, and then I go try and find a low. Okay. Did we get to 50%? Nope. Okay. Range ain't set. 50%. Nope. Range ain't set. 50%. Aha. Huh. Huh. Where did we reject here? Ain't that something? Mando model. Mando model completes at 1168. But right off the bat, right now you'd be 27 to what is that? 15. It's pretty good. So yeah, that's pretty crazy. We did tap into that imbalance here. We didn't fill it, but also something you can look at is low, high, lower low. We're to take out this high right here at what is that? 2406 or no, higher than that. Right here. 2450. Or no, it's higher. Sorry. Click the wrong one. Right here at 2484. Then you have a bullish breaker. So then that's when I would truly expect it to move higher. But ain't that something? And this is the thing. This is why a lot of people on here, they'll say, they'll say these, what's it called? Oh, okay, this is what I'm thinking for the market, this, that. They can always turn it, even when they're wrong. They can turn it and be like, oh, look, I'm right. I told you, blah, blah, blah. The market is so fractal that you can break this up into multiple different, theories or ways to create a thesis. And that's why you can really get away with doing stuff like that. Because look, on a higher time frame, I'm bearish on Rivian, but on a smaller time frame, risk reward makes sense for a long to me. Maybe not for you. Again, this is something that you need to control your own risk. My risk is probably different than yours, and yours is probably different than so and so's, and so on. So, but yeah, all right. I mean, I think that's really all I have for tonight, unless anybody else has anything really quickly. But I'm just looking right now to see if I got any messages in the group. Oh, nice. You were in for the first dip on NASDAQ. Good, man. I'm glad. You don't need an alert for that, right? Once you learn how to do it, you don't need anybody. So, all right. Well, all right. I'm gonna cut it here, guys. So, thanks for popping in. Cool. So again, if you came in a little late and you want to catch up on the beginning, this will be on YouTube tomorrow. So you can check that out. But thanks for joining. I hope it was helpful, and I'll catch everybody tomorrow.